Welcome to the Wiser Management Roundtable, where we believe the best financial advice should always be conflict-free. I'm your host, Casey Smith. Guiding you to financial freedom today is my co-host, Jordan Sute. Hey, Jordan.
Hi, Casey. How are you?
Doing good.
Good.
I'm sure everyone's been listening to the tax theme for this quarter as we get ready for tax season. Jordan's joining us from Sute CPA. So we're glad to have you. You can find them at sutecpa.com.
Correct. Yep.
Well, let's get into today's topic. We have a lot of business owners that are clients of our firm, obviously your firm as well.
Right.
And, you know, I think as business owners, these are actually really good times, I feel like, to be a business owner.
Agreed. There's
been a lot of turmoil, obviously, at the beginning of COVID last year, but small businesses appeared to be very resilient. In fact, I enjoyed watching. I know the restaurants were scared to death,
right?
But I enjoyed the creativity that I saw in small business owners, from businesses that weren't even really online. There's this store over in Kennesaw. It's called Redbird, and it's a boutique store. A lot of the women in my family like to go there, and she started posting things on Facebook. Say, I have these items for sale. Like literally just walking through her store, taking pictures on Facebook, and you'd be amazed. People were sitting at home, stuck at home, and they were like, oh, I'll buy that. Oh, I'll buy that. And then they basically just leave a bag sitting outside or just inside the doorway, and you drive by and you pick it up.
Wow. That's awesome.
and again, they probably should have had an online sales system established well before that. But to see the people's creativity, a restaurant in Seattle during COVID, high-end restaurant, they're like, what are we going to do? I mean, restaurants can't be closed for a very long time.
Right.
It's not a high margin business at all.
Right.
And this was fine dining. So you ordered your meal. They had runners that would run it to your house. And then you got in on Zoom and you zoomed into the restaurant, and they had a piano player.
No way.
So they're trying to recreate their experience. And so you could zoom in and listen to the piano while you're eating their food at your house.
That's awesome.
So creativity has been absolutely amazing. But what I find is that business owners are really good at their business, but they're not always good at taking care of themselves. And whether that be the tax return or even just their own planning and budgeting and executing their vision. They have great vision for probably, hey, let's put a piano guy on Zoom.
Right.
They also, that same restaurant started, I think, a drive-up burger place. Like they would just start cooking burgers in their backyard, and people would drive by and pick up burgers, which was pretty cool.
Yeah.
But they're not always good on really taking care of themselves, keeping their books clean. It can be messy.
Yeah.
And that's honestly, I think that's what separates the great ones from the ones that just have a job.
Right.
Right. They don't have a boss per se.
Right.
They have a passion, but they created a job for themselves rather than a business.
Right. We see so many clients that are so good at what they do. But yes, when it comes to the books and the taxes, they just kind of sometimes turn a blind eye, or they try their best and they're just not really getting the best answer that they could get.
Yeah. Well, that's something that I look at least quarterly is my P&L.
Right.
Because that tells you what's working and what's not working.
Right.
For me, several years ago, I decided that doing tax inside my office was not good for us because the margins just weren't there.
Right.
It drove us crazy during the madness of tax season, and then also doing financial planning and also managing, hundreds of $1 million in assets.
Right.
So that's where we partnered with you guys. We said, hey, we have 150 people over here who need tax returns.
Right.
How about we just give it to you and you sign, I don't know if you even know this, but Michael and I signed like a service agreement. Hey, you'll take care of my clients at this type of service level.
Right.
And it's been great. It's been a great partnership. What I realized is if I hire a solo practitioner to come and work inside my office, there's a reason why they're a solo practitioner. They don't work well with other people.
Yeah.
And so we just found headache after headache. Same way with our in-house attorney. We had an in-house attorney here for years. But then finally I realized that they just have a job. They're not interested in scaling.
Right.
They're not interested in returning phone calls and emails in a timely fashion.
Right.
So it just got to the point where I need to partner with a firm that knows how to scale and do things in mass. And Gregory Doyle down the street has done a beautiful job at that with us. Now, that doesn't mean there are no good solo practitioners.
Right.
But as a business owner, you want someone who understands business.
Right.
And how to create processes and follow those processes. So you guys are, how many people are in your firm right now?
There's 6 of us.
But then during tax season, do you bring in some extras? Or do you pretty much have the 6 year round?
We have 5 full-time and then 1 person, Megan, in our office. She's part-time, but then she comes on heavier during tax season.
Okay.
Yeah.
So we have now 8 people here. So we're about the same size. And you're growing at about the same pace that we're growing. So that makes us a good fit because we have to all create processes that kind of let's call it mistake proofing.
Right.
have to create processes that people can go all the way through and have a good result on the other end. Even when I'm personally not doing the financial planning, that one of our great team members here is taking someone through a plan. And that's what so many people are missing in their business.
Right.
I'm meeting today with a gentleman that has a great job, but he hasn't developed a great business. And I'm trying to show him that there's a whole nother level here that will solve all your financial problems. If we can just get over the fact that you have to do everything and you have to delegate.
Right.
You know? And it's hard.
Yeah, definitely.
It's hard. So let's talk about some commonly missed tax items for small business owners. And I don't know what your full list is. I have some in my head.
Okay.
But let's go down your list. What do you think number 1 is?
Well, this is a big one. And I think we kind of talked about it before, is you have to have a system in place to catch all of your deductions. A lot of times we have people that come in and their personal funds and their business funds are all commingled. And so things are getting lost. Even the common ones, even the ones they should be getting, they're forgetting about them because as they go through their monthly statements, they're only calling out certain ones when they really should be calling out a lot more. So I think first and foremost, you have to have a separate pools of money, separate bank accounts, separate credit cards, so that you are making conscious decisions on which business expenses are which and which personal expenses are, which. I think that's first and foremost. Like that's where people miss the most. Because if they're not getting the big ones, then they're definitely not getting the small ones in that way. I had a call last week with a young lady who has a new business, and she made a comment. She's like, I have no idea how much money I'm making. And so it's like, all right, well, how do you have your system set up? And she's like, well, I pull my personal bank account into Excel and I just kind of highlight. And I was like, oh yeah, we're never going to get the answer we want if we're just kind of letting it all fall and we don't have a plan. We're not on QuickBooks or some sort of system that's categorizing everything for us. So I think step 1 is you're going to miss deductions if you are not separating things, keeping them nice and neat. You're never going to catch it all if you don't have a plan to start. So
yeah, and then you have a legal issue too, because if your business was ever sued because you did something wrong or perceived to have done something wrong, they can show that this is not really a business because all their personal stuff's just running through it.
Yeah.
And therefore, Mr. Judge, we need you to disregard this entity, which is your protection, by the way.
Right.
And now they can get right into your personal assets.
Right. And then even more so with the IRS, or well, not even more so, but also the IRS. If they ever come in and question, your S Corp or your partnership and they see it all in one account, they're going to say, why is this on a separate form? This should be on your Schedule C. And that's even more highly scrutinized. So definitely recommend separating the two. That's our first step.
It's okay to take draws.
Yes. Absolutely.
Take the draw, put it in your personal account, then spend the money.
Exactly. Yes. If you need to take 1 million draws out of the account, do that. Just have it be in a nice, clean fashion so that it's very clear what all is going on in your account.
Right.
Mm-hmm. Yeah. So that's step 1.
Okay. Step 1, separate your business checking from your personal checking and run it like a business.
Right. Yes, absolutely.
All right. What's number 2?
Number 2, I think we can kind of look at them together, your car and your home expenses. Everybody who owns a business has to get in their car to go somewhere for business. I would think most of them. And then most people now, especially in light of COVID, spend time at home working on their business. And so there's definitely missed opportunities there to take car expenses and a home office deduction on your tax return. And then there's even more opportunity there with the car to take even bigger expenses, depreciation on a car. There's some very specific rules you have to follow, but there are opportunities there if you're interested.
Yeah. The car is always a little tough from a planning standpoint because I want clients to live a debt-free life.
Yeah.
But sometimes having that car purchase in the depreciation, you get some of that back.
Oh, absolutely.
I just can't get too crazy with it.
Yeah, I mean, to get the full deduction from purchasing a vehicle, it's going to have to be over 6,000 pounds. So that's, think, large SUVs. And it's going to have to be used 100% for business. So how many people can say that they're using their cars 100% for business? Probably not a lot.
True.
But as long as you're using it for more than 50% for business, then there's the opportunity to get, whether it's 50% of the cost of the car depreciated or 75%, there's opportunities there to really take advantage of. If you have to get a new car and you're using it for business, there are tax savings involved with it. Sure. Even if you are financing it, it doesn't have to be.
Right.
Yeah.
Right. Or even leased, right? You can write off a portion of the lease.
Yeah, for sure.
Okay.
And then even more so on that, you have your gas expenses and mileage. And you can either take, there's one of two ways to look at it. You can either take the standard mileage deduction, or you can take your actual expenses. So all your oil changes, all your car washes. If you're a realtor and you're driving people around in your car and you need to have a nice car, there's a business expense,
yeah, that's probably a real good one.
Yeah, oil changes. For that, I would just suggest, whatever line of work you're in, whether it's, you're a realtor and you're 1099, so you have either a Schedule C or an S Corp, take a look, quick Google search, what are common things, that I'm missing in this field, and that it's a great resource to see, like car washes, you might not think about that. So.
Yeah. Now, you have a couple of choices. You can deduct the entire car on the return. So oil changes, maintenance of the car, everything, right? Or then some people track mileage.
Yes.
So they pay for everything personally, the oil changes, the gas personally. And then, and then they basically get reimbursed mileage as a deduction. I see that probably more where they don't own the business. So if you own the company probably owns the car. Right. Which, by the way, has to have a title in the name of the company. Right. Yes. Yeah. Oh, yeah. Big one right there. Big one right there. Has to be in the business's name. Yeah. Yeah. Needs to be in the business name. Now, a trick that I use is it's in both my name. It's both company and personal, because commercial insurance is very expensive for an automobile. So my car is owned by Wiser Wealth Management, and then literally there's like a comma, I think, and it says Casey Smith. And then that way I can use my personal insurance. Nice. Bree at Allstate. I didn't know that. In case someone is looking for an agent. She's great. Good to know. All right. So, is there a situation where you would take mileage as a business owner and that's better? Does that protect you in any way with the IRS? I don't think so. I mean, you should have records of both. I think a lot of times it's easier. I feel like it would be easier to keep up with mileage than to keep up with every gas receipt you have. I don't know. I don't know. But there's a lot of apps out there that we hear clients using where every time they get in the car to go somewhere for business, they hit a button, and then when they get there, they hit another button and stop, and it tracks their mileage in an app, and then we just get an output at the end of the year, instead of them having to keep up with every gas receipt and every oil change and every repair, all those things. I think mileage can be easier to keep up with, I guess, depending on the scenario. And then also mileage, I feel like people might think that you're going to get less of a benefit if you choose the mileage option. And that's not always the case. There might be more benefit from choosing to take the mileage option because you're getting, 54.5 cents a mile, which could be more than the actual. Actually, maybe that's better than if you have an electric vehicle, maybe that's better to take mileage than it is. Exactly. Because you don't have the gas expense. Right. Yep. Exactly. Interesting. I just thought of that. It's a good one. It's a whole article we can write. Yep. Whole nother episode. Whole other episode, right. All right, what's next on your list? This is a small one, but I still think it's important. Petty cash expenses. Anytime you take, that's not going to be kept up in your QuickBooks. You're just going to see ATM withdrawal. And then you're going to forget about it. And you're going to say, oh, maybe that was a draw. I was taking money out for kids' lunches or something, But if you're ever using cash, make sure you're keeping your receipts. And if you're on QuickBooks and you have a bookkeeper, give your bookkeeper those receipts so they can manually enter them. So I think that's something, while albeit small, it's still a missed deduction, not making sure that you're keeping up with all of your expenses, the ones that aren't hitting the carts as well. And that goes also with checks. Too. At the end of a year when we're doing tax returns, we help people kind of clean up their QuickBooks if they have it. And I remember this last year, I opened up a QuickBooks and there were 100 checks written with no memo or anything of like
indicate what was going on. And so I'm like, oh goodness. And so we had to get on the phone and kind of chat through each of these checks. And she had record for some and not record for others. And it was a hard exercise to make sure we were capturing all the business expenses there.
What I see sometimes is people using personal credit cards for business, especially in the startup phase. And then that's captured, but then they don't pay that bill off. And then there's interest charged. They're probably not capturing that interest on their tax return either.
Yep.
Interest expense.
Yeah. Any kind of loan interest, any credit card interest, it is still business expense. And we can deduct that on the return for sure.
What's next?
Kind of in line with the interest charge. I feel like people sometimes forget their accounting fees and their legal fees. I mean, maybe not legal fees as much as accounting fees, because I know for us, we have a lot of clients where we do their personal and their business return, and it can be all wrapped up into one bill, and they pay it and they just don't ever think about it again. But really, a portion of that bill is personal and a portion of that bill is business, and they have the opportunity to deduct the business portion. We can't deduct the whole portion on the return,
right.
But there is the chance to deduct probably the larger half of it, which is the business side. And so I think people just forget that sometimes. Even if you're coming to a financial advisor and you're getting personal advice, but hey, a portion of it is centered around your business as well. Anything that relates to your business, is eligible to be deducted on your tax return.
Yeah. Yeah, I can see that.
Yeah.
Even estate planning, right?
Yeah, for sure.
So paying off the legal fees, create trust, and how is your business handled upon your death? I mean, all that should be deducted as a business expense.
And I know it can be hard to determine how much was this, business related. Your best, judgment on it, and as long as you have a good faith effort in kind of determining the portion, I think that's as much as you need. I mean, if the IRS were to ever question it, as long as, like I said, you put in a good faith effort, that's really what they look for, is a good faith effort and some basis for the deduction.
Let's talk a little bit about research and experimental costs, and who does this apply to? A
big opportunity for taxpayers is the R&D tax credit. And so you can take it in a pass-through and it comes through to your personal return, or you can, if you have a C Corp, it can be taken on the C Corp as well. And I actually have a call next week with a client who's going to do an R&D study. There are teams that focus exclusively on doing these R&D studies and helping you get the most precise answer that if it were ever questioned, the IRS would, honor it. But it's a big credit out there that's available to offset, income tax dollar for dollar. And for R&D, it's a really nuanced credit. When I worked in Big Four, we had a team that was literally all year long worked on R&D credits. And so I can't speak to the super technical nuances of it completely, but if you and your business are working on developing, researching, creating new processes or ideas, it is something to absolutely look into. Call your tax advisor, see if they have a contact for you to help you learn more about it. And
I've always struggled with how to apply that, even to my own firm, because when I think about this, I think some mad scientist in his basement, and he's designing a new contact lens solution.
Right.
But when it comes to most of our businesses here in the States are service oriented now.
Right. And
so if I'm developing a new way to do financial planning, possibly,
yeah.
I don't know.
I do think of it as more of a hands-on thing. You know, I mean,
if you own a restaurant, do you get it from trying to create this new Jello?
New frying system. Yeah.
Does it have to be mechanical?
It does not have to be mechanical. And I was actually reading up on it, and I think that's one of the misconceptions is that it's purely, manufacturing or hands-on.
Right.
It's not. It's much more than that. But like I said, it's so nuanced that, I mean, there are teams out there that spend all year long on this one credit to help taxpayers. So.
Which I think we've seen a few people go through that process. It's not cheap.
No, it is not. And so definitely, I mean,
the benefit.
Yes, the benefit has to outweigh the cost of that, of whoever you're employing to help you. But there is opportunity there for sure.
The last one I saw was like a web service firm. They developed some new platform to for people to develop their own website.
Yeah.
And I think that was able to get a pretty substantial R&D credit for that 1 year.
Right.
Yeah, that's interesting.
I'm excited to be on that call next week so I can learn more about it myself.
Yeah. All right. What else you got?
A good option here in Georgia is the Georgia Retraining credit. This is for just Georgia state income taxes. It can be for pass-through or C Corp. So if you're paying your employees to retrain at all, whether it's a training course that you're putting on, or maybe there is continuing education that you're having to pay for, a class that they have to attend, there's opportunity to take a credit for that on your Georgia state return.
Okay.
So per employee, it can be up to 50% of training expenses per employee with a maximum of $500 per class.
Okay.
So I know that's like kind of a lot of rules, and it can be used to offset up to 50% of your state income tax liability.
Interesting.
So yeah, you have a class.
I didn't know about this one. It sounds like on the face of it, it's if you let somebody go and you're trying to retrain them into a different industry, but that's not what it is. It could be anything that involves training.
Yes. Any kind of training. We see a lot in our fast service restaurants that we have clients that work in, quick service restaurants.
Yeah.
They have a lot of training cost and they employ this a lot. And so it really makes a difference when you have a lot of employees too, because this is something else that for our clients, they go through a different firm to help them make sure they qualify for everything and that the courses are Georgia approved, because there are certain, nuances about which course it is. But as long as, same thing with R&D credit, as long as that cost of employing that firm is outweighing the benefit, then I absolutely think it's something to look into.
So it's not that seminar in the Poconos.
Probably not. Not that, meeting down in 30A. Yeah, probably not. But it's a great credit. We see a lot of benefit from it. And especially when you have a lot of employees, it's something you should be looking into for sure.
Okay.
Yeah.
Those are great.
Yeah.
Do we complete the list?
I've got more.
What?
Yeah.
How many more you have?
Just a couple.
Okay.
I think another big one, kind of going back to the car, is depreciation. Whenever we have new clients come into our office and they decide to move forward with us, we re-prepare their taxes from the previous year. And so several times over this past year, especially, I've been re-preparing business taxes, and I'll look at their depreciation schedule, and they're depreciating things over 5 years, 10 years, 15 years that they could have taken immediately. They could have gotten full depreciation for them because of the TCJA that was passed a few years ago. 179 in bonus is like wide open right now. And granted, that may change with the whatever looming tax law we have, but for right now, especially in 2021, there's the opportunity to fully expense a lot of property and a lot of equipment and a lot of basically anything besides your improvements and your real estate, real property.
Okay.
So I actually had a client the other day that was like, I'm thinking about buying this piece of medical equipment. It's going to cost $10,000. Should I do it now? Should I do it in 2022? And it's like, it doesn't matter if you do it now or in 2022, because right now we have the full bonus and the full 179 deductions. And so, I would buy it now. Let's accelerate it now and get the deduction. We're always about deferring taxes. So
yep.
I think that's something that people miss. Maybe they don't realize that they could fully depreciate things. And instead they're following the traditional rules and depreciating over 5, 10, 15 years, according to the useful life. So definitely a big missed deduction is doing.
Especially if you have a big growth year revenue.
Oh, yes, absolutely.
It's a great way to offset it.
Mm-hmm. Yep, for sure.
Also, what about how you run payroll? If you think about maybe you pay everyone like on January 3rd for December pay.
Yes.
Why not pay them on the 31st, even
right.
if you had to use a line of credit or something to do it? You use December 30. You pay them on December 31st. Now you've just lowered your net income by your payroll for 1 month. Now, obviously, you have to keep doing that because the next year is going to look a lot better all of a sudden if you don't do that.
Right. For all our cash basis taxpayers, which is essentially probably everyone we deal with, for sure, that is a way. Get it done by December 31st. Any expenses you can put in this year will help you. But it is like kind of a revolving.
If you don't do that the next year.
Next year your income will go up. Right. But
it gives you 12 plus more months to be able to cover a bigger tax bill, as opposed to, oh my gosh, this was a great year and I didn't quite realize that.
Right, exactly. Yeah. Now is the time to start looking at your financials. And if you're up, find those expenses that you can take advantage of now as opposed to in January, for sure.
What you got? I don't know this list. I'm running blind here.
I think in addition to the payroll that you're running, I think most people know this, but just in case they don't, you can't deduct the income taxes that you pay on your business tax return. But you can deduct the payroll taxes you pay for your employees. You can deduct the payroll employer portion of any wages you pay yourself as the business owner. I think sometimes people forget that. And then benefits that you pay for your employees. I mean, the retirement match, the health insurance, those small little things that you might forget about, they're deductible and you should be taking advantage of them for sure.
Yeah. You think that'd be so straightforward, but it's,
I hope it is, but yeah, I'm sure sometimes.
I'll add something here, maybe not so much about tax deduction. I've helped coach a few businesses that were really struggling. And in one particular business, it was a dry cleaners, and they had multiple locations. They should have been making a lot of money, but they had a job. Like, they were hard workers, and they should have been working for somebody else. They didn't have any business being business owners.
Right.
And to help prove that, when things got tough, they quit paying their employees' share of income tax to the government. So, the employee takes out their portion, and then you pay your portion, right? And it all goes in together through the payroll. And they just started writing checks directly to net check. And then all of a sudden, the Department of Labor, Georgia Department of Revenue, I guess, or Labor, Georgia Department of Labor, was knocking on the door going, "Hey, where's our money?"
Oh, no.
And that is the fastest way to get
your
business
some bad
shut down.
Lists.
You cannot pay your credit card. You cannot pay your car note. I mean, I guess eventually it gets repossessed. But that is the fastest way to shut down your business, is not paying your employee taxes. Like, there is very little grace there.
Yeah, that hurts my heart.
And honestly, the only way that you can really solve that is that you just need to get in your car and drive down to the Department of Labor personally, because I feel like they're less likely to shut you down if you're there personally.
Yeah.
But because they see some really bad actors cheating the system. In this case, I don't think they were cheating. They were just desperate.
Yeah.
And so the easiest way to solve that problem is use an ADP, use a Paychex, use is it Paycom or whoever online. Use a service.
And those fees, they're deductible.
And those fees are deductible, but you make sure that tax gets paid, because they're going to pull it out of your account.
Right.
And they hold it. If you're paying monthly, they're holding it, or quarterly rather. They're holding it in trust basically, and then they'll pay that bill when it's time.
Right.
But don't mess with that.
Yeah.
That's just it's hard to come back from it,
right.
honestly, because the banks aren't going to loan you any money when they realize that the government's already after you.
You have an angry government and probably angry employees because you're messing things up. I can't even imagine.
Yeah. There was another situation. We couldn't help this company, unfortunately, but it was the prior owner of the company said he was taking taxes out, and he wasn't. And so you go a year later, and then all the employees go to file their tax return, and they should be getting refunds,
big bills,
but they can't get refunds because money was never actually paid in. There was no record of them even existing in the system. It's like they never worked.
Yikes.
So don't mess with that.
Yeah. Good, smart business decisions only.
Right.
That's what we're advocating for.
Realize really early if you have a viable company, and if you don't, walk away.
Just walk away before any bad decisions are made.
Exactly. Exactly.
Agreed. That's my list.
That's your list. That was a great list.
Okay, good.
You surprised me on a few of those. I have to go make
glad.
sure I'm getting all my deductions.
Yeah.
I think I'll add a couple of things. When clients or prospects come and talk to us who are business owners, we have some really good, really successful people here that I learn things from as business owners, and a couple are even on our advisory panel to me. But I created this company through a process that took a while. I was an airline pilot for 12 years. I was flying nights mostly in order to build Wiser Wealth Management as we see it today. And I haven't flown since 2014. And even prior to that, I was probably the most underpaid airline pilot, because I dropped every trip I could possibly drop so I could be here.
Right.
But it was a good launching pad for me, because I didn't have seed money to do what I wanted to do. I've been talking about doing a podcast. I've been doing this podcast for a year and a half, almost 2 years now. And we didn't have the wherewithal to be able to do that. But it was a vision for like 4 years, right? Now we're hitting our stride, and I really credit a couple of books. We're growing so fast now. I try to read a book every couple of weeks over a topic that I feel like I'm struggling with. But in the beginning, there was really 2 books that helped launch our growth. And one of those was Michael Gerber's E-Myth Revisited. It's a book that you can find easily on Amazon. And that book really helped me think bigger than I was. creating an organizational chart for my company of the future. And yes, there were things that all of us here had to do, multiple jobs, right? That's what happens a lot in small business. But it enabled me to start delegating, thinking about service and what I want service to look like at our firm. And then once I built out what the future should look like in the processes to do that, you think about Chick-fil-A. Mm-hmm. You go to any Chick-fil-A, you, for the most part, get the exact same level of service.
Right.
That's what we have to be able to do as business owners is replicate or duplicate our processes to where other people can do it, and we don't have to be a part of that process as much.
Right.
And so Michael Gerber's book, E-Myth Revisited, was a great baby step into that process for us. And it's a book you really should read once a year, because you're going to read it and you go, oh my gosh, I totally forgot about that chapter. Shoot, I'm not doing that quite right. And then go back and relaunch again. The other one was from just a marketing standpoint. I really like Donald Miller and the things that he puts out. Now, he's running a business coaching podcast now. The old podcast was Marketing Made Simple. I think it's called Business Made Simple now, BMS. You can go to businessmadesimple.com. And his classes that he gives are only $275 a year to sign up for these classes. And we've taken most of them as a firm together. It's a great learning platform for us. But the first book was Building a Story Brand by Donald Miller. When you read that book, you realize how you should be marketing your firm. Mm-hmm. And then the follow-up to that is kind of like the workbook of it, is how I describe it, is Donald Miller with Dr. J.J. Peterson and Marketing Made Simple. And that's literally the step-by-step story brand process so you don't mess it up. And we probably were growing around 20% a year, which in my industry is like the target for most firms, especially larger firms. After deploying this processes, last year we grew a little over 35%. This year we're topping 60% in growth.
Wow, that's awesome.
And this is the first year we had probably the full court press as far as the confidence and the content that we create, and this podcast, our YouTube channel. And so for all you business owners out there, if you can get a hold of those 3 books, even if you need to focus on operations, hand the book to someone else in your team and say, hey, read this story brand, and I want to implement every single bit of this to the T.
Right.
Don't say, oh, this doesn't really apply to me. It all applies. The whole book applies to everything. Just do it, right? It's so funny. I see people hire experts, and we do this. We attempt to do this here too. Hire an expert, and then we go, I don't know about that. It's like, well, what do you mean you don't know about that? We just pay this person a lot of money. So follow the expert guidelines, right? And say, okay, we're going to just give this a shot. Now, it takes a lot of time to create the story brand process. Our website is worked on, I'd say weekly, at least checking to make sure everything's working properly. So there's always improvements. We have 2 great people here that are helping us launch all this, but it's a team environment, team process. Yeah. But hopefully, those 3 books would help you in your business. And if you're out there, you feel like you're stuck, you just want to talk about something, you can call me anytime, because I love talking about this stuff. Because honestly, in small business world, there's not a whole lot of people you can talk to. Yeah. Especially in your industry. I tell our clients all the time, it's like, I can tell you how it works in the service industry, but you're running a manufacturing firm, or you're running, this type of business. You got to find your support groups. Dave Ramsey's business, Entree Leadership, I believe, or Entree, can't remember the exact brand he has, but you can go to Dave Ramsey. They have groups. They have mastermind groups. You can meet, I think it's on a monthly basis. It's all done virtually. Mm-hmm. And you can find other business owners to run ideas off of. And I'm not a member of that. I felt like it was kind of simple, but if you're just getting started, that's a great place to go. And then you have the podcast at Business Made Simple, as well as our online learning, even creating a mission for your company. Like how important is that? And it's really important, but no one has one because no one knows how to write it. And when you write it, it sounds like a lawyer wrote it and it doesn't mean anything. Right. But going through Mission Made Simple, the Business Made Simple, we as a team were able to write down even our core values. So when we hire people, we make sure we're hiring people that are going to be great fit for the team because they hit our 4 core values. Right. So those are things that, these are obviously beyond a tax return. But if you want to have bigger tax problems, you got to grow the business. You got to grow it in a profitable way.
Right.
not just create a job for yourself. So, Jordan, enjoyed the conversation.
Same.
As always.
Yeah.
And we'll see you next time.
Thanks, Casey.
Thanks for listening to the Wiser Roundtable Podcast. We hope you enjoyed it. Make sure to subscribe wherever you're listening. That way you don't miss out on new episodes. Head to wiserinvestor.com and reach out if you have any questions. We would love to hear from you. Today's episode was produced and edited by Lilton Moore.